Good evening, everybody. Guess we're getting ready for the holidays. Tonight we got the great pleasure of having Price with us again. I think pleasure because in all the years that I've been doing this type of training, I would say Price is probably the right word, steadfast technical investor that leads the whole industry for teaching how to trade on a technical basis. And I don't want to use up his time, but I watched some of the talking heads on Fox Financial News, and one person saying, you don't look at technicals, they don't mean anything. And I'm thinking, what the heck? People are making fortunes using technicals. So I'm going to say, Price, welcome again to the Candlestick Forum. Everybody, this is a person that gives you very, very good information. So welcome, Price. We're anxious to see what you got for us tonight.
Well, thank you, Steve, and happy holidays to you and yours, and happy holidays to everybody tonight. I'm so excited to be with you here as we look to finish the year strong. You say strong, the market's been plunging, but Steve and I were just talking about what a great market it has been if you know how to trade the downside. And to me, if you're looking at educating yourself to get ready for 2019 and beyond, you've got to know how to trade both sides of the market. And I'm just kind of curious, I've got my lead consultant, Chris Sarin, with me to help answer questions. He just popped in some info there, so feel free to pop questions in throughout this almost hour together. We'll try to make it concise and focused for you. But I want to know kind of how many of you say that you're trading the downside well or not at all. If you're not trading it at all, just give a 0. If you think you're nailing it, give yourself 100 or some score in between of how well you've been trading the downside this year. I'm just kind of curious, if you be frank about it. The best thing is, so Don's killing it. He's got a perfect score of 100. Casey hasn't traded it. Linda hasn't. Joe hasn't. Don't sweat it. We're going to teach you something really simple tonight. Some of you are getting a piece of the action. I'll be getting most of it. Roy, good to see you. And we'll help you trade it better. Bottom line is that it's got to be something simple that you can use on both the upside and the downside. And also, I believe you got to know when not to trade. So what I'm going to share with you is just one really simple technique. We've got a variety of filters we put around it, but if you kind of start to get your eyes open to this technique I'm going to share with you on how we trade weekly options on the FANG names, with this indicator, I think you're going to really position yourself well for success in 2019 and beyond. Just a reminder, of course, that everything I share with you here today is for your information and education only. Nothing here should be considered a specific recommendation of buy or sell any particular investment. Of course, you know that you are 100% responsible for your own investment decisions. That's why you're here, to get empowered to make better decisions going forward. We'll help you with that. But not all Big Trends products and services are appropriate for all investors, because every trade that you do, especially in options, involves risk. So you've got to trade with risk capital. Start small and build up is what I always tell people. We'll talk about how we manage risk for our FANG options traders. We don't put any personalized financial, tax, or legal advice out to any individual. What we do is we take our research on the FANG names, recommend a specific option trade to our entire FANG options universe of subscribers, and then also tell you when to get out every time. So you never are left hanging. It's the end of the year, so my accountant says after December 31st, he just becomes a historian. If you're going to make a move, you need to do it before December 31st. Well, it's coming up so fast, it's hard to believe. Less than 2 weeks away. Bottom line is that it's a great opportunity to consider services like these for potentially 100% tax deductions if you qualify relative to your income level and what you're putting into investment expenses already. Check with your tax advisor. They'll tell you what you need to do there. So we're going to talk about what the FANG stocks are, why I love weekly options on the FANG names, and especially love weeklies on these higher dollar stocks, and I'll show you an example of that. I'm going to give you a very specific indicator, and more importantly than just the indicator itself, I'm going to show you the exact setup that I need to see to get a new significant trend signal. If we don't get it, we just stay away. So we've got some filters that will help you to show you in case studies when it was time to stay with it, when it was time to get out. It's all about modeling what works and also knowing when it doesn't fit the success profile anymore, how to get out, move on, whether it's a win, lose, or a draw. Now, if you're new to this concept of FANG stocks, if you've been under a rock, then basically you know that the original FANG names, if you're learning about this, Facebook, Amazon, Netflix, and Google. And then we added 2.5 years ago, we added Apple into the mix as well, and now you're starting to see more people talk about FANG with 2 A's in the middle there because everybody considers Apple part of this universe. They're all big-time tech names, but they're also big-time market disruptors. They've created new industries, whether it's Google with paid search, whether it's Netflix with streaming binge-worthy content. Amazon, of course, now does more than 1/3 of all e-commerce sales. All e-commerce sales, that's insane that they do 1/3 of the total e-commerce business. Facebook, you know, has been through its ups and downs, but basically created the social media category. Certainly its leadership of it. And Apple, of course, a dominant player in having that mobile device in your hand that you can do so much with. Bottom line here is that why should you care? What I think is pretty interesting here is that over 28 months of data, and I'm sorry I haven't had a chance to update this recently. I've been traveling some, and basically we're essentially flat over the last couple of weeks. But you'll see that we've been making new equity highs. If you're a pure breakout trader, just had a new breakout to new highs of the end of November, early December. But bottom line is that $8,355 in profits. If you just put $1,000 into each new trade, and basically said, okay, never. So if I can only buy one option contract, I don't care. That controls 100 shares of one of these big-time FANG names. That's tremendous leverage. And it includes all winners and losers, but it's before commissions. So definitely factor your commissions in accordingly. You can see over the course of a couple of years, we would expect to have potentially a couple hundred trades. So if you're paying too much for option commissions, you should check with us. My lead consultant, Chris Sarah, can get you more information about brokers who can not only be reasonably priced for options trades, but also can help get you in and out automatically on the trades I make at any time during the trading day. So that's called auto trading, more on that later. But basically what I think is very encouraging, through that same point in time in early December, this year alone was more than half of our profits looking back over the last 2+ years, $5,500 of gains. And yes, it hasn't been a straight line up. There's been some occasional givebacks. And I think you can actually see that even a little better. But you think about that, that was over about 11 months essentially. So you're talking about over $500 a month in gross profits, and that was saying if you're only putting in $1,000 a trade. We never hold more than 2 FANG trades at one time. So we're not loading the boat here. But you can see if you break it down on a month-by-month basis, and we really break it down for you, some good months, some bad months. You can see the red ones are negative months. The green ones, of course, are positive. And August and September were not pretty for us. You can see we were down here in the neighborhood of about almost, not quite $2,000, $1,950. You can see the next 2 months we made back, and we're up $2,650. So the point here is that when I lose, I want to lose smaller. Most of our losing months tend to average somewhere in the few percent range on average versus our average winning month. As you can see, we've got loads of ones that are above 500 and even lots of them above $1,000 a month. If you're trading, say, a model $10,000 portfolio, putting $1,000 in a trade, which would be my max, no more than 10% of capital allocated to a trade. And when you're up over $1,000, that's more than the 10% gain for the month. So you can see, like July was a $1,900 gain. January, of course, is great for a lot of people. $2,600, 26% gain on a portfolio basis for the month of January alone of $2,600. Then everybody gave it back in February. We gave back $101. So I like to win big and accept that when I lose, that I can seek to lose a lot smaller. So we'll go into a lot of these case studies here on the bull and the bear side. And this is one here right before Thanksgiving on Netflix, where Netflix was broken down. The indicator we're going to focus on here is this green line here. And this green line you're going to see on a lot of these patterns is called the ADX. It's the average directional movement. ADX, average directional movement, developed by Wells Wilder, the same guy that developed the RSI indicator that a lot of you are familiar with. A lot of you may be familiar with ADX, but maybe not as the right way to use it based on my testing, is that you want it to be relatively low and turning up. And so we're going to talk about this pattern. When it turns up, then you want to see that green line keep going up, because when it turns up from a low level like that, and we're going to continue to reinforce this pattern, if it keeps going up, it says this is a trending market. You say, well, hold on, I feel like I've already missed out on the Netflix breakdown here. You're telling me to get short after it makes this move, and you see it's kind of a slow move that day, starts to flatten out later in the afternoon. A lot of people get nervous on these and say, oh, I don't want to hang on and hope or hang on and expect that it can go down again. But what I'm saying is, you know what, ADX is still going up. So as long as it hasn't hit a trailing stop, which we'll talk about, we're good. Now, when we get a double or more on a gap, in this case, on the downside, you see the next day it gapped from 272, open at 255. we were very proactive. We bought the 267.5 puts. They're more than doubling, up 109 and change %. And you're saying, okay, then we say, thanks, take the money and run. Good thing we did, because you see it did reverse. If you're just following the ADX rollover, which we used to only do that, you can see you've given up pretty much all your profits by the time you would get an exit on the indicator alone. So we do factor in price action, but it's the indicator and the analysis of the technical side first that tells us when you've got an edge as a trend trader. And thanks, Chris, for reaffirming. We're going to get into the positive and negative directional movement lines here, too. On this next one here, I've got a different black background, so we actually like the yellow ADX a little bit better. But you can see this was Netflix back there in the late October, and it's below this moving average here, this white line, so we can only take bull trades when they fire. And you see we're getting one trade here, and this ends up being the next morning a quick 46.9% gain. Then you get a quick trade in the same day, up about 50%, 49.95%, catching that move October 24th. And then here's one that didn't work. Looks like we're getting another signal here. Looks like we're ready to go. The day before, we already had some bear trades on, so didn't want to load the boat. 2 at a time is as much as we'll hold. But we're starting to, flattens out at first, then it starts to drop. You say, okay, it's starting to feel pretty good. And then look, it gets this reversal, and we're getting stopped out on our trailing stop rules, because it was up a little bit for us, so when it starts to hit a certain trailing stop I'll tell you about, we end up losing a few % on that one, down about 3% on those 270 puts. With the big high dollar moves that Netflix, Amazon, Google, and more have had, we sometimes have to go to a little more out of the money option, whereas originally when I did this strategy I used to use a lot of in the money options. It just depends on the stock. We'll get into option selection a little more. I'm kind of curious with the crowd tonight what your typical preferred trading style is. Are you a day or really quick trader, 1 to 2 trading days? Are you a swing trader? Hit number 1 if you are. Hit number 2 for a swing trader if you're 3 to 5 days. It's your typical hold. 3 as a position trader, 1 to 4 weeks. Or the more active investor, 1 to 12 months, number 4. Passive investor, buy and hold, number 5. So we get some pretty active traders in here, it looks like. Looks like the kind of day to swing trade time frame. And that's really where I would focus you. We're in somewhere between we're about one and a half here. We're in the 2 to 3 day range when we're talking about how many days we're going to typically hold these on average, okay? 2 to 3 days. Now, if you think about it, ideally, if you're trading a small account, you're just getting started, we don't want to do a lot of day trades. So we're really sensitive to that. The only reason we would do day trades is, A, if we got our profit target at 100% in a day, or we saw some turn in the indicator that made us book our profit, and based on our trailing profit protection, or we hit our stop. So there are several things that can trigger us to get some occasional in and outs. And at the same time, we don't want to do more than 2, certainly no more than 3 day trades in a 1 week span. That prevents you from, even as a small account, getting labeled as a day trader, pattern day trader it's called, to do 4 or more day trades in a 5-day span. We don't want to do that. So you'll see us being very sensitive to that, making sure you can keep trading through all kinds of up and down moves in the markets. Now, what we're going to go through here is we're going to go through some of the tools that make up our trade funnel. I use a lot of platforms. I'm a big TradeStation believer. I've used it since the early 90s when I got started in trading, fresh out of Duke University, and said, okay, thought I knew it all on the fundamental analysis side, quickly made the classic mistakes of buying and holding, thinking the market would catch up to my unbelievable analysis of the fundamentals, and learning that, gee, there's a lot of things happening while I'm waiting in the form of technical breakouts and breakdowns. And so it made a quick shift to technical analysis, and TradeStation gave me the way to test it originally. Metastock has also been a big help for me in my testing, and Thinkorswim is a phenomenal platform as well. It has so many tools available, all inclusive. So the beauty of this is that, okay, what I do is I say, let me first, as you showed on those, as you saw, started to see on some of these charts, let me first start to make sure I'm on the right side of the bigger time frame. So we'll use a moving average as a filter. But as we mentioned, the directional movement lines show you how much net new highs and new lows we get. I'm going to go into a couple of slides on explaining all that. ADX is a very specific pattern relative to how those DMI lines are moving. This is all based around Wilder's concept of what he called the true range. This creates our trade funnel. And the point of a funnel, as you know, is to start to narrow your focus down here into just a few opportunities that should kick out the best of the best money-making situations here. If I'm trading every single blip in the market, I'm not going to have the focus on where the big trends and the big opportunities are if I'm trying to trade all the little ones too. So it's like fishing. If you catch a little fish, you're better off to throw it back than mess around with it and go looking for the bigger fish. It's the right thing to do too, but it's especially the right thing to do in trading because you're focused on where your big money can be made and really make your year in very short order with these types of options trades potentially. Now, what we're looking at with directional movement, what Wilder said is that, you know what, DMI is showing you essentially the net new movement in the form of higher highs is positive DMI rising, and if you're making lower lows, that's negative DMI rising. Higher lows would be DMI minus the negative DMI dropping. But Wilder's basically biggest contribution on this whole topic is he said you got to be aware of the true range. You know, so when you're looking at Steve's candles on the Candlestick Forum sessions and saying, you know what, I'm looking at, I can't really draw a candle very well here, but I'm just saying, you know what, you got your typical sort of rally day, color it in green here for me, bear with me, we'll close out here. And bottom line here is that then the next day you gap up and you get some doji pattern here where it opens and closes about the same level. See, Steve, I pay a little bit of attention to your web events as well. You know, bottom line, quite a bit actually. I love your stuff. But basically, what most people would say is that the high-low range on that second bar is the day's range. We should call that R for the range. What Wilder said is, you know what? You're totally missing something here, folks, which is the prior day's close. You draw a dotted line out to where we close, and then we gap up. He says you got to take that next day's high relative to the prior day's close to get your true range, TR we'll call it. So you know what? You're saying, Wilder's saying that the true range can only be greater than or equal to that R, daily high-low range. Because if there's no gap, then the true range will equal that day's range. But when you have gaps, it starts to factor in additional price movement. And so you start to see the true price movement. The true range is the term, but I'd call it the true price movement, the true trend ultimately, for what I'm going to show you, to help you really see when the market really gets moving in the way that you want it to move. Versus if we start to see trading ranges, you'll see that we'll see ADX upturn. It'll just be going flat to lower in a trading range choppy market. I don't like to trade chop. I don't believe we have that much of an edge trading chop. That's that little trends, little fish. I'd rather trade the clear, strong trends in either the upside or the downside. So what ADX does is it says, you know what, if the directional movement line, meaning the new highs are going up, so we'll draw like a channel here, you get higher highs, and you also get higher lows, so that would be the negative directional movement would be going down, you're getting less new lows. What is that called? That's called an uptrend, right? You know that it's going to be making higher highs and higher lows, and that's a market that you'd like to be trading to the upside. If you fight that and try to catch some of those brief little dips down, you usually get burned. So you want to know where the bigger trend is happening and align yourself with that, even with your short-term trades. And so ADX starts to pick up when that thing starts to really trend. It's interesting, like even during this decline, we've had buy signals that have worked. Right after the midterm elections, that's November the 7th. You'll see on these charts, to get enough price action to make it relevant and it tests well, I don't use 1-minute charts or 5-minute charts. I use 30-minute periods and candles here. And so when you look at this, you say, okay, Amazon was just barely on the gap up at the close of the first half hour on the 7th of November. Amazon had just closed back above that black line moving average. So it just went positive right at the close right there. We had another one that finished like 3 pennies underneath. I think it was Google, parent company Alphabet, but GOGL didn't quite get there. So Amazon made the cut. Google did not. And you can see it got that hard lift early on in the trade session. This is after Wall Street saying, oh, good, now everything's safe. We all know now not so fast. But bottom line is it says, you know what, for that window of time, there was a great momentum trade to the upside. Now, our trailing stop rules say once we get to at least a 30% profit, which this one got up to about a 75% gain, didn't quite get to our double. And then if it goes back 30 percentage points from our peak gain, we will go ahead and say, you know what, bail on it. And in this case, it hurt us because it went on to double plus that same day. Why? Look at what ADX is doing. It's going up all day, and then it gets this kind of really volatile action the next morning and would have stopped us out certainly by the close of that next morning's November 8th, 10 a.m. Wall Street time bar and candle. But bottom line is that, okay, so sometimes our trailing stops will actually not get the bulk of the move, but you'll see in this tonight, there's a lot of cases where it saves our bacon, where we take a profit when we could have ended up something flipping on us and turning into a loss. We don't want that to happen. To me, that's some of the worst money management that you can have when you've got a nice gain and you just give it all up hoping that it's going to bounce back. I've talked to folks that got into Bitcoin a year or two ago and had 10, 15, 20, 30 times their money made as of the start of this year, and I begged a couple of them to just sell half of it. Just sell half, just get a big chunk of change in. Oh, but I have to pay taxes on that. Well, that's a good problem to have. Now they're really kicking themselves because they've given back 80% off of that peak. Anyway, principles apply no matter what vehicle you trade, but we like options because they're liquid with these FANG names and they're quick. You can get these profits very, very quickly. Now, if they don't work, you can quickly get out. You'll see in some of the examples we'll show you. So you can see here, we got out quickly on that one, ended up going on a little further. We're going to show you loads of other examples. Here's the case for Google. The reason I love this chart in particular, GOOGL is the one we like to trade for Google. And you can see here that when we're getting our ADX upturn in green above that declining directional movement line, that's a negative directional movement in red. So that's saying we're making less new lows. The blue line is starting to rise, saying we're starting to make higher highs, looking back in the recent time. But a lot of people look at this chart and say, well, if you only trade price action, you're probably saying, off of this high right here, I'm not trading this market until we close above the high of that bar. Well, you can see, officially, we got the signal on Google about 1140. We weren't outside of the top of that range yet. But if you waited until we closed above it, now you're at 1150. And the exit happens here as we just barely roll over here around 1160. So instead of buying 1140, you buy 1150, it goes to 1160. You've only made half of the move profit that you could have made versus the ADX upturn. Some people mistakenly think that ADX isn't very useful because they say, well, it might be upturned, but you don't know what direction it's going to go. We always overlay the positive and negative directional movements on it, so you can really benefit from this. Now, so yeah, and like Chris mentioned to Lee, we trail stop some of these options with real-time email and text alerts to you that you can say, okay, it's time to raise your stop. Here's your new price on the option. You should tighten the stop. And if you're afraid of missing out on those, check into auto trading. It doesn't cost you any more than if you're executing yourself at a couple of select options-focused brokerage firms. So basically you say, look, this is one, and at that point when it rolls over, should you bet on it going the other way? Absolutely not. We're still above the moving average. The DMI lines are still net positive, and you can see it's still kept on creeping higher. It's just that we're trying to catch that speed of movement phase. You can see some of the best speed of movement here is this thing is accelerating. After the breakout, we're in several hours, a couple hours at least before that breakout. So that was a 121% gain. Like we said, these days we take it out at a double, so call it a double, and that's good enough for me. Okay, you can see some of these contracts will cost you more than $1,000. This year we put in for Google and Amazon because they had both gone over $1,000 a share. We said, you know what, we need to stretch to $1,500 maximum per trade. So in this case, we bought one option contract for $1,480. It's quoted at 14.8, but it controls 100 shares for one contract, so that's why it's $1,480 before your commission. A commission should be less than $10 and probably less than that even. I know some people that would be able to pay $1 a contract with no ticket charge in some places. So, bottom line is you should be able to get your commissions down dramatically, especially as you become a more active options trader. Now, here's a case where you can see where's our action point. It's interesting because you say, well, gee, it's headed down. Why was the ADX not going up yet? Because remember, ADX is not just remember that recent little decline; it's also remembering a prior advance. So it's basically saying overall in this last look-back period, you haven't really gone anywhere. But as you start to make more net negative directional movement, the red negative directional movement here starts going up. So we get our crossover point happening right in here. So I'm never going to be early with this, but what I feel is it gives me the ability to catch sort of that speed of movement phase and what I call the sweet spot of the trend. So it's the more consistent phase as you start to see more traders piling out in this case on the downside signal. And you can see in this case, the next morning when it started to reverse up, that little V reversal there and ends up being a pretty big time reversal by the end of the bar. We're getting out in here as it's starting to reverse off of that morning low. So that's what allowed us to protect a lot of our profits. If we waited until the ADX rolled over right in here, we've lost time and we've lost price action, that is. Some people think I changed my name to get in the investment business with a name like Price Headley, but my family's been in the thoroughbred horse business for generations. When I was at Duke, I told my dad, I said, I want to do something more conservative than breeding thoroughbred horses, Dad. I want to trade stocks and options. He thought I had lost my mind. But the beauty is, now that I've been doing this for nearly 3 decades, is that you really get the ability to manage your risk a lot better in the investment markets and the options markets than you do when you breed thoroughbred horses, which I love horses. It's a great game, but it's super high risk because you don't have the kind of risk management opportunity you have getting in and out with these FANG option trades, for example. So a quick 60% the next day. The whole point of all this is, why would I buy the stock when it's cheaper to rent it with an option? Why would I buy that house if I'm only going to need it 1 or 2 weeks out of the year? You know, of course, you might pay a little bit of a premium if you want to be in that house. Say it's in Florida and it's February. You know, I go down to Naples every once in a while. And you know what? The highest month or weekly rent rate is in February because everybody wants to be down there. All the snowbirds come in and say, okay, fine, I got to pay a little premium for that. It still beats buying and sitting on that house for the other 50 weeks of the year. You know, so the beauty of this is that you can pick your spots when you really want to get in that particular trade or investment, and then you can know when you can be out quickly when it's time to cut and run. So, like with Google trading over $1,000 a share, if you say, well, you know, if I pay $1,500 max for one contract to control 100 shares of Google, I'm controlling it like 1/70th of the cost. You know, so you know, like 1.5% the cost of the stock. So in that case, that's where that leverage really kicks in, because we don't need a tremendous percentage move. Where Google could move 20 or 30 points and be at just 2 or 3% move, and we've already gotten a 60+%, or sometimes even 70 or 80 or 100% gain on just a few percent move in the stock. So the beauty of this is it really keeps it simple. Here's a bull example with Netflix. And this one already had the price breakout. So hey, if we're waiting for structure and structure hasn't come along, we won't chase that breakout. We'll say your higher confidence trade is making sure that that is coming on board, and it did right in here. You say, oh, how many times do you feel like you see the buy signal here? You already saw it breaking out, and you say, now you're telling me to buy it. It's rallied another 5 points or whatever, and you're going, I feel late on this. I feel like I'm chasing. Do you ever feel like when you see a pattern like this that you don't get on board because you feel like it's already rallied too far, you feel like you've missed it, and then you go back and you look at how much more you missed, how much more you left on the table because you weren't willing to get on board? This takes the emotion out of your trading. How many of you, just a quick show of hands, have felt that way where you don't chase a breakout, it turns into something much bigger, and you wish you'd gotten a piece of it? Even with this down move recently, we'll show you some more downside signals. Yeah, I'm raising both hands because I was there once where basically I was just like missing out on too many opportunities. Because, you know, it's like, you know, finally one person's on a scale. Okay, Linda, thank you. Junior, yes. We've all been there. Bill, thank you for being honest. You know, the bottom line is that that's why everything that I share with you is based on not just my personal experience and what worked and usually came from what didn't work before. Kind of the Thomas Edison approach to investing and trading is I tried some things that really did not work, and I kept going back to the drawing board, kept testing, kept taking that testing forward into real-world trading until finally it did work. And then I was like, okay, then I just got to repeat that pattern. So it's that, like that Edison quote of what is success? It's 1% inspiration and 99% perspiration. That kind of thing, you know, that you're getting the benefit of helping me shortcut you through those early years of pain when I first was kind of in the dark figuring out how to convert from fundamental to technical analysis for short-term options trading success. And, you know, the bottom line here is that, okay, at this point, look at where we get our exit. The next morning when it flips up and starts to flip down, that's hit our profit protection stop. Again, we would have taken it off the open anyway over 100% based on our new rules of book to double. But you can see it goes a little bit higher later that day. And you know what? If you get complacent, you start holding and hoping, a lot of times you can wake up one morning and the stock's gapping down, not just a few points, but earlier in the year, there was an example where we told people to get out of Facebook. It ran a little higher after we got out. People were kind of kicking me going, oh, you only made 60%. I made a double, or I'm still sitting on a double. And then a day or two later, the stock gapped down and get back all those profits and get the, you know, don't hear from those people after they, you know, turn a gain into a loss. So you have to be following the system and saying when it's no longer active, get out. What I also love about ADX is that when you see a breakout like this, here's Amazon. And you can see that after that big surge, you say it's really slow there for the bulk of that session here. How many times do you see a flat flag-like pattern there where it just kind of chops around sideways, and you say it keeps chopping around sideways, and you just say, I've had enough. I'm watching this thing go sideways. I'm losing on this out-of-the-money Amazon option call, and I'm saying, okay, I can't afford to hang in there. I'm done. And we say as long as it doesn't hit our our kind of first disaster stop, as we call it. We put in a first stop that's pretty loose just to give ourselves, in case something really wacky happens in the market, we don't get caught totally unaware. But typically, the pattern on this is that it can consolidate, but then you see it starts to surge into the close here, and then it gaps up the next day, and as it starts to flip off of there, we're saying we'll take the 64.8%, thank you, and take the money and run. Lisa asked also, is there ongoing training? Yes, I do weekly training sessions, weekly videos for my FANG options traders, where you get the benefit of me looking at each of them, talking about what I liked about the past week's pattern, what I like about it right now, or why I'm waiting if it's not properly set up. So we go through all these and do a lot of intensive week-to-week looks, so you can kind of make sure that you're learning from what's working and what's not just a black box system. You get all the settings as a subscriber too, so you know how to follow along at home once you get on board. So you can just see, like, here's Facebook right at the start of the year. This is literally the first trading day of 2018, January 2nd. Can't believe that's now almost a year ago. You can see it starts to break out, and again, this is another one where you say, gee, if I just traded price action, maybe I could catch that a little earlier, but I'm always worried I might get a fake out if I don't have the ADX officially on board. You can see there it comes on board about the fourth half hour in. So 2 hours into the new year, first day of trading, January 2nd, you're saying now we've got a signal to buy Facebook. It's about 181 right there at the close. Now, here's a case where we can buy in the monies with a name like Facebook, and with Apple we can also. They're below $200 a share. And you know, the beauty of this is you can say, you know what, we're in at on a 175 call at 635. It's already at 181. That means if you're new to options, a 175 call is the right to buy at 175. It's at 181. You have a $6 intrinsic value already. You're only paying $635 for it. The weekly options, of course, we're not buying that much time, so you don't have to pay a lot of excess when you buy these in the monies. In this case, it's basically about 90% intrinsic value and only about maybe 10 or 11% time in this option. You can see, as a result, Facebook goes from 181, and then when the exit hits on the ADX rollover here, stock's about 184. It's rallied 3 points, not quite 2%, and we've made almost 60%, 57.5% for like a 29-to-1 leverage ratio. You know, that's what gets me excited about this kind of trading strategy is, again, this is the one I was telling you that then it went on a little higher. We got one more ADX upturn, but it's coming from too high of a level. Don't do that. Some people say, I only trade high ADXs. That's a mistake. You can get left holding the bag. You think you're getting on board on this breakout here, and then it flattens out. And you say, well, I'm not really down on the stock. It's kind of hanging in. Then you walk in a few days later, and you've seen the stock down 10 points, and you just said bye-bye to your options, probably in all likelihood. Don't do that. That's the kind of complacency that will get you in trouble with options trading, options buying. If you're new to the concept of weekly options, of course, weeklies are ideal for getting in and out quickly. If we're only going to be in an average of 2 or 3 days, I can buy an option out a week and a half, even 2 weeks, and know that I'm going to get some nice leverage compared to buying the stock or buying even a longer-term monthly option. These now are typically created every Thursday, expire the following Friday, but with the FANG options, they trade a lot more actively, and so they go ahead and put them out there typically 4 to 6 weeks ahead. You've got every week. This is an example where in November we had 5 Fridays, 5 weekly expirations every single Friday. And so, you know, it's a great example where you say, okay, now I can custom tailor my option choice to what I want to be in. You know, if something's reporting earnings on the 29th, and we're basically sitting on something that's like, say it's the 15th, 2 weeks before those earnings hit, I don't want to buy the options that expire on the 30th. I want to buy the ones that expired the week before the earnings hit on the 23rd. That would still give me a week to potentially play this. We won't need that much time likely, but those options in the 23rd expiration won't be juiced for the earnings volatility. So it gives you a lot more flexibility. So you know what I mean if you've looked at these compared to where earnings are hitting or other big events. As you know, the Fed came out there yesterday, went ahead and tightened rates anyway, and the market didn't like it, and we've seen some additional sell pressure. But the bottom line is that, you know, it's going to be really interesting to see how things shape up, not just over the next day or two, but as we head into the new year, because we've had so much volatility that I think you could see strong volatility down and strong volatility back up. And so you really should be preparing for some tremendous opportunities here if you just know where to look. I don't think it's going to sit still. Okay, if you say it's going to sit still, you probably wouldn't want to do any option buying strategy. But my belief is that, I think you're going to see that when it does bottom, which I'm not saying it's going to bottom right away, but when it does, we can still make money on the downside here right now, and then boom, when it flips, we can quickly get our 30-minute charts flipping back up to give us buy signals, just like the Amazon signal I showed you November 7th, right off of the midterm election results. So that flexibility is really important, and we like the FANG names because they're just so liquid. They're so easy to get in and out of. Here's another case with Apple back in the happier days when Apple was rallying last year. You can see that basically a lot of times you'll see some catalyst where there's a gap happening. This gap here, we don't buy right on the gap. We say, okay, we're waiting for that ADX turn to happen. It happens the next bar in. So it happens on this close. Stock's trading about 161. We buy a 155 call. It's worth about $6 intrinsically. We only pay 7 for it. So a buck out of our 7 is time risk. If nothing happened and stayed flat at 161, then we're going to lose that buck out of that 7. We'd lose about 14%. But if it rolls like this one did, you can see I just kept going. And what I love, again, about this is, look, you can get flat periods, and ADX is incredibly resilient. It doesn't tend to roll over because, remember, you're not really making any new highs, and so that's why the new highs line's going down, but you're also barely making any new short-term lows. So those are just barely converging, not enough to flip that ADX line over yet. And so that keeps you on the train for the next pop-up the next morning. When ADX does roll over midday the next day, we're out. And you see, in this case, again, went up a little bit more before it came back down. Another Apple example, probably the best Apple trade we've had, this was a Cinco de Mayo trade. You can see it ran right up into the resistance right on the first 10 a.m. Wall Street time breakout, and that was a new signal there. So, and you can see by the coding we do, we test all this stuff, and it'll tell us, okay, buy here based on the testing. This is the time where you have this edge. Again, another consolidation late in the first day. We're in the trade, and ADX keeps on going up. So you can see ADX only rolled over when this hit here on the reversal. We'd be out now these days off the open when we get 100% gain. So the beauty of this is that after our testing, we've seen, okay, there's been some that get up to about 100 or just over, and then they flip on you, and then you end up making 60, 70, something like that, and then you say, okay, well, I'd be better off to book it at a double. And that's what our testing showed after a couple years of samples is that, rather than holding out for the 150 or 200% winner, which doesn't happen that often, you get a double, that's about enough. It might go a little further, but oftentimes, you can see in this case, it was right off of a short-term peak. I mentioned earlier, why do I love high-dollar stocks better than low-dollar stocks? If I've got a $200 stock in orange, a $20 stock in green, you see here that we get a situation in which, if we say each stock's going to rise 5% in 5 trading days, that'd be a nice move, right? 1% a day, 5% in 5 days, takes a $20 stock to 21, the $200 stock goes to 210, right? So just putting a multiplier of 10 on these, they look like they're going to be the same kind of result. But if you buy about 2.5% in the money, 19.5 call on the cheaper green stock, 195 call, tenfold on the $200 stock, you can see that the options don't end up quite adding up. We see a situation in which we get a $1 price to buy that 19.5 call. That means it's a half point intrinsic value, and thus the remaining half point is the extrinsic or time value. On the more in-the-money option here, buying the 195 call, that costs you, it'd be worth $5. It costs you $5.50. That means you got a higher delta. You're only paying 50 cents of time versus the $5.50 total cost of your investment. Less than 10% of the options cost is time risk. So get 2 contracts of that, say $1,100. We'll get you 2 contracts of $5.50 each. So we match that up over here. $1,100 gets you 11 contracts of the cheaper one. Some people get it seduced and say, "Oh, goody, I get to get 11 contracts rather than 2." That's not how you should think about this. What you should think about is when the 195 call goes to 210, what's that going to be worth? Well, it's worth 15 points. That's $1,500. You got 2 of those contracts. That means that you paid $1,100. It's worth $3,000. You got a $1,900 gross profit. These examples are all before commissions. It's 173% gross profit. The other example, you say, I'm doing fine. That goes from 19.5 call at 21 is worth $1.50, $1.50. I paid $1, so I'm making 50%, $550. It's still about 3.5 times better on the high dollar name versus low dollar. The only caveat to this is that leverage of the higher dollar names cuts both ways. When you're wrong, you could be wrong by a greater factor if you don't know when to pull the plug. So we never leave you hanging. If it's no longer the right kind of trade, we tell you to hop out and move on, and that's why we're so sensitive about the risk management and the trailing stop piece of this. So when, in this case, Amazon gives a signal, second bar in, nice steady action all day. We took it out the same day, in this case, because we were a little concerned that maybe it had just gone a little too far, and we were worried about this kind of next morning gap. That's exactly what happened. It gapped down. I could have hit our trailing stop, probably would have, and then it flipped up later. If we just followed the ADX alone and had the guts to do that overnight, we could have made a little more money because ADX was that kind of resilient. And yet the reality is that, you know, sometimes we just, from a risk management perspective, say taking the quick 50% gain was the right thing to do. These days we don't love to take day trades if we don't have to, because we'd like to say, you know, we don't want to have a bunch of day trades and create a situation where we, after 3 day trades in a few days, we might wait a day or two to get past the 1 week rule and not do 4 day trades within a 5 day span. But you can see after that, it's chop city. It goes down, it goes up, it comes back down, it comes back up. We don't want to worry about that. We want to catch that sweet spot trend, at least for that first day that we caught it there. So, you know, here's one of the probably the best examples of how we get the Netflix breakout here, October 4th, and then you can see here that after that, it's actually giving us kind of more of a descending flag type of a pattern, perhaps a little triangle, if you will, starting to form here off of this little area as well. The bottom line is that it's against us. We've almost got stopped out on price action, but not quite enough. And look at how ADX was still trickling up even into the end of the day, and then the absolute launch there, you can see, gives you a lot of confidence to ride the rest of the way. So this thing rolls over the following day after that. Netflix options, of course, they were pretty expensive, but we still got 48.9% on that one. You can see, again, Facebook, another one we can buy those in-the-money options on. Here's a case for Facebook, September 6th. We're showing this breakout the second day. You don't even have to be a green candle. This is a red, slightly negative reversal on a pure price basis into the close right there. But our ADX is saying it's time, get on board, even though it doesn't look like it broke out above the prior bar's high. And you can see it starts to gradually climb up, and then a couple bars later, it's closing above it. Again, you'd leave some profit on the table if you wait for that. So in this case, you see the next day it rolls over. We're getting 74% gain for a couple days worth of work. 124 call. Remember, where are we trading? About 127.5. So we're only paying about 40 cents a time on a 390 option. Maybe, you know, about 12% time risk, 88% intrinsic value. That's ideal when you can do that with Facebook and Apple, and we do that. I think that one of the secrets for our success is that we don't just focus on reward. We're always worried about what a position could do against us. So you'll see us be very active in managing risk, getting trailing profit protection out, making sure that we can keep riding if it's working, but if it flips, then we can go ahead and be able to hop back out. This chart's interesting because you can see that upturn in Google's happening right near the end of the session. We can see this upturn happening before the close. So we're seeing that happen. We can get the trade out as late as typically about 3:45 Eastern, about 15 minutes before the close. We think that's still sufficient to take advantage of it, not just for auto traders, but for other folks who get email and text alerts in real time. It gives you time to either place a trade yourself or let the auto broker place it. You can see this one, too, hadn't broken out above that early morning high, but yet, do you think maybe anybody knew something about a coming upgrade, some kind of positive news item that was going to hit the overnight or the next morning? I always suspect that I'm not the one who knows those things, but that somebody else does know those things, and the price action truly tells the tale. That's why technical analysis and this kind of pattern is so valuable. Other people would say, well, look, okay, so you made your quick 88% the next day. But other people say, look at the ADX upturn here. Shouldn't you have traded that on the downside? No. Why? Because, one, you're still above the moving average. You can see the moving average held a support right in there. Also, ADX was too high. If it was the right pattern, it should have been coming up from a lower level and turning up at that point. So we like to see ADX kind of dead for a while. It shows you that it's non-trending. And as the old motto goes, the longer the base, the bigger the breakout. So those kind of sideways chop kind of frustrate people. They give up. Then they come rushing back when they see a strong trend in motion. You know, the options pricing model assumes the only thing you don't know is volatility. But the reality is the options pricing model assumes that there is no trend, that this future stock price or FANG price is going to be the same as it is right now. We all know that there's going to be trends. The question is, are you able to get an edge in assessing that? The strong trends with the in-the-money options where we can, or at least when we use the out-of-the-money options, being very, very disciplined about our trailing stop rules is very important. Here's a downside example. Now you got the negative directional movement line above the positive directional movement line, and then the ADX crosses up October 18th. You can see at that point, we're seeing it right back into some key lows, but our system says about 1120. You should buy those Google puts. They're out of the money, you can see, and then boom, quickly it pops down under 1,100 bucks. Now in this case, that same trading day, it did hit our trailing profit at 30.8% gain, and we're up about 60% or so, and then it flipped back against us. Notice ADX didn't roll over till the next morning on a big gap up. At that point, you have given back all your profit. We didn't want to be a part of that. So that's why it's so important to use those trailing stops. When we call it a trade in real time, typically after any half-hour bar, we'll say buy to open, whatever the option is. This is 2017, so you can't mistake and try to do this trade because it's very much in the past. But it would say buy to open, whatever that particular FANG name is, whatever its options strike price, whichever weekly option it is. We spell it out to you explicitly for you and the auto brokers to be able to take advantage of the benefit of fast entries. In this case, it was at $9, 900 bucks or less, or better means or less if you're buying. So 900 bucks to control a stock that's trading around 1,000 bucks. So that's where your tremendous 100-to-1 type of leverage happens. There's another Amazon example. This is one where we would have given up a little bit if we just go for the double, because it starts to break out about the fourth bar in. It's still below the morning high, but you can see it's on its way. That little pullback late would scare a lot of people, right? It flattens out, but it does not roll over, and then it rockets the next day out the following morning when ADX rolls down. So you can just see that that's the kind of thing where you can make a double plus in very short order if you just catch the right side of that leverage, and if it's not working, you cut and run. Some of the real keys to FANG options trading success is you got to have a catalyst. I believe that this pattern tells us where you're moving out of a range into a new trend. And so certainly it's a momentum shift. It's a breakout of sorts, but it doesn't have to be a pure price breakout. It can be essentially a price structure improvement to tell us we've gone from range-based to now trend trade mode. Where we can, we like to buy them in the money. That gives you a higher delta on your options, which means you're going to get more fast bang for your buck. And it creates more of a stock substitute mentality. So now you're renting that stock and still not worrying too much about the time erosion where you can. The ADX terms will dictate the exits, or the profit protection stop once we've got a gain over 30% starts to kick in. So that will tend to get hit before the ADX rolls over. We've learned that that's a pretty good rule of thumb. But if you have that ability to ride until the ADX rolls over, that's probably your bigger potential trades. Once we get a double, we say we don't need any more. We'll take 100% gain. Thank you very much. And we'll move on. Every week I do a video training update where you get ongoing training from me with every open position and closed position reviewed, as well as all the big FANG names looked at as to the current structure for the week ahead. So when you look back at how we did with Netflix over the course of several trades in late October, you can see this pattern developing. You see how the negative directional movement starts to kick in. The ADX starts to turn up off of a low level. We said thank you very much. That first one, thank you very much. The second one, that same day we went ahead and cashed it in before we got the gap against us the next morning. And then 47 and 50% gains roughly, and then you can see this one got a 3% loss because it was starting to work. Our trailing stop kicked in the next morning and said, get out. Even though you said, gee, this thing looks like it's a free fall candidate, it's breaking the support. The markets look like that a lot lately, but when it does bounce, you're going to see it bounce hard because now everybody's starting to position for the downside. We don't really care which way it goes in 2019 as long as it keeps being plenty volatile. As I said, that's what's given us the opportunity. Over the 28 months total that we've been doing the FANG Options Trader Alert program, so we're talking about more than 2 years of data, you can see it's been a pretty nice equity curve. It was interesting, too, late last year, about this time a year ago, we had a couple of rough months. And I told people, I said, if you give up now, you basically are giving up at the worst possible time typically. So anytime you give up after a little drawdown, you can see how many times this has snapped back. Does it guarantee we'll do it that same way again? No. But it means that you're looking for patterns of success, and you've got to trade with risk capital that you can say, okay, I'll give it a chance to show what it can do. Obviously, over the course of a couple of years, everybody's talking about how the market's down 7% in the matter of a week, and a lot of stocks are in bear markets down 20% or more. We're up dramatically this year in our FANG Options Trader program because of our success trading the downside explicitly. So you've got to be able to trade both the bull and the bear side. Now, from the standpoint of, okay, one more example here of Facebook, this is another example where when we get the signal, you can see that last time, even if we took this last signal here, let's say, I don't think we already had a position or two on, so we didn't take that one, but where would you get your exit here? You'd lose a little bit because about 2 hours later, you get stopped out. So let's say in this example, you lose, we'll call it $2. Okay, so if you lose $2, you might lose 20% on that option over the course of a couple hours. And you say, we didn't trade it because we already had other positions. Let's just say you were trading Facebook exclusively. The next time it happens, you can't look back and say, well, I just lost on it, so I'm going to wait, I'm going to pass, whatever. You've got to be disciplined and say, okay, don't wait for this thing to break out. You're giving up too much of your profit potential, about a third of your potential max profit if you wait for this official breakout up here versus our entry down here just under 178. You can see it goes up to about 185, 184.5. And you can see that that's good for almost a 90% gain, 89.78% 2 days later. Look at how that ADX is just so steady. It might bend a little bit. It might flatten out a little bit. It may go up at a less accelerated rate. You know, like right soon after we got in, it kind of flattened out there, but it didn't roll down. And that's the important part. You want to see that. And by the way, if you're saying, I'm a position trader, that doesn't apply to me, I'm moving on. Well, take this ADX indicator and go plot it on a daily chart and for your next month type of trade. Take it and look at your big name stocks you like to look at, whatever you like to trade. If you're more of a next 6 months type of a trader, investor really, you look at a weekly chart. It's all about adjusting your time frame, the same principles. I'm amazed how well it works across a lot of different time frames. We just have had so much success trading these very quick pops. As I mentioned at the beginning of the presentation, for those that came in late, back right before Thanksgiving, we were thankful because we were able to trade the downside on Netflix as it broke down here. You see just early in on the 19th. A lot of people are like, I'm not going to trade this week because, you know, you got a half day on that Friday after Thanksgiving. But this was happening right at the start of the week on a Monday, and we're like, we got plenty of opportunity. We know we'll probably be in and out in a couple days, 3 days at most typically. When it gapped down the next day, it was good for more than the double. Like I said, 2018, even better than the full year total when you annualize it out. Talking about, again, a typical model $10,000 portfolio, you'd be up about 55% gross returns if you're just putting in 10% of capital per trade. And then factor your commissions down, you still got plenty left over. So the beauty of this is that, you know, you just have to accept that not every month is going to be up. Some months will be up, some months will be down. The key is, are we going to be up more when we're up, and we're going to be down relatively less on average when we're down? So you can't get too worked up about a down month or two. You have to say, look, even if you had that string of losers April, May, June, if you can't handle that, you say, okay, geez, that seems like it would sting a little bit. You'd say you're down about 12.5%, and then you make 19%. You make $1,900 back. You make that $1,250 back, and then you still have an extra, you know, $650 left in your overall gross profits to the good. So the beauty of this is that, you know, even when it seems like you might want to pull back, you know, November and December last year, like we said, we had a little give back, like almost $1,500, and then January up $2,600, extra $1,100+ in your pocket if you stayed with it. So you've got to be consistent with this strategy. Now, what we're doing for Steve's group here in the Candlestick Trading Forum is something that typically I just reserve for my big trends community, my past paying subscribers. It's kind of like a loyalty bonus, but I'm passing it along to the Candlestick Trading Forum here tonight and for this very short period here over the coming few days, because I really believe it's a great opportunity for people that are kind of like deer in the headlights. If you're really worried about the market, if you have not been trading the downside well or at all, and you need to start learning how to trade both the upside and the downside, this is the perfect service and system to do that. Even if you're worried about not being able to take advantage of in and outs over a couple of days, then bottom line is that you say, you know what, you might consider the auto trading program so you can kind of earn while you learn. So the beauty of this is that usually 3 months would be $299. We cut it down to $199 for a 3-month access. But even better, usually a year is $19.95. We cut that down for my Big Trends community recently to just $595 as a thank you to my other paying subscribers. And I said, you know what, I'm going to offer this to Steve's group as well tonight because I'm just in a good mood. It's been a very good year for us at Big Trends, and we want to have you participating in that in 2019. And now we're doing that. You can actually get what I call an instant double on your subscription time here if you act quickly. I'm going to give you a BOGO, buy 1 year, you get the next year on me. So I instantly double your subscription from 1 year to 2 years out. So now you're positioning to benefit from 2019 and 2020. I can't believe we're already talking about the next decade, 2020. But basically you say, okay, this is now getting 24 months of access. I'm not changing the price, keeping it at $5.95 for 2 years of access. That's 200 trades over the next 24 months. That means that, think about that, 100 trades a year, 200 trades in 2 years. That works down to less than $3 a trade if you were breaking it down on a per trade basis on the value you get with this BOGO by the year, get the second one on me. And all you have to do is go to this site link here at bigtrends.com/FANG. Let me drag that page up here real quick and just show you how this works. I don't want to keep Steve and his crew here too late, but I want to just, in a few minutes, just kind of walk you through how you can take advantage of this. So when you go over to bigtrends.com/FANG, you will see it's spelled out here of what you're getting. You're getting these real-time trade alerts. You're getting the weekly video training from me. You're getting the ability to have it auto-traded for you at no additional charge to what you'd pay that broker if you did it yourself. And you just go to bigtrends.com/FANG. You can also see down on the right, the variety of trades we've made money on. And yes, plenty of puts, obviously, in recent times. But earlier in the year, plenty of calls and some puts mixed in as well. So we're agnostic about which way the market's going to go. We're more saying let's just follow the trend, follow when the next proper setup happens. And so the beauty of this is that you don't have to worry anymore about does it go up or go down. The key is, are you getting a piece of the movement when it goes up or it goes down? And it doesn't, like I said, there's going to be losing trades, but the beauty is that I have a high degree of confidence that you're going to really benefit from this in 2019, and now if you take advantage of the BOGO special through 2020 as well. So all you do is you hit the add to cart button if you want to do the full, instant doubling your subscription term, do the full year, turns into 2 years for one low price, $5.95. It will not rebill on you. It's just a one and done investment. I'm confident that you're going to love it and want to buy more of it after we get a couple years down the road for those who lock in this fantastic BOGO best pricing ever for the FANG options trading program when you break it down on a per trade basis. You can click that text below the 3 months if you just want to try for 3 months for $1.99. That's fine too. But we'll hit the add to cart where the value is best on the 2 years instant double for well under the price of one. And so you're getting these trade alerts. You also get our members access. You can go back and look at loads of past weekly training sessions over the past year. You can look at past trade examples. You can really learn so much in addition to the specific real-time trades we're giving you. All you have to do is hit the checkout button. We've already applied the coupon code to be the lowest it can possibly be. There's no taxes unless you're in the state of Kentucky, no shipping. You just get instant access. You'll be ready to start trading and taking advantage of this volatility. All you do is fill out your information there. Once you've clicked on that checkout button, you can click the PayPal button there as well. We take all the major credit cards, of course. And you got to get that information, including your email address. And I want to point out to you also, if you want to get text alerts, say Chris has helped you tonight, click his name on there and say, yeah, he assisted me, or you saw it on a webinar, whatever you want to do. But if he's helped you, please give him credit. But what I want you to do is say, text me the alerts here in this customer note, and then you can just say whatever your number is. So whatever your mobile number is that you want to get texted the alerts, type it in there, and then we ask you just type in what your provider is. If it's AT&T, if it's Verizon, VZ, I'm just thinking of stock symbols here, but you know what I mean. You can type out the full word if you want. Sprint, just tell us what your provider is, you name it, because we put those different provider texts on different batch lists, so we make sure that nothing ever gets hung up. We send everything out simultaneously so you can take advantage of it. We'd like you to review the terms and conditions, of course, before you sign up so you know, okay, how things work. This is a one-time investment that you're making in yourself for the next 2 years, not just the next year of 2019, but now the next 2 years to lock in these kind of FANG options opportunities on the upside and the downside. It's simple options buying, folks. You're not dealing with spread trades. You're not dealing with complexity. We're keeping it incredibly focused and simple for you, telling you when to get in and always telling you when to get out. Once you review the terms and conditions, you agree on it, click on that, you've read that, you see how we operate, and like I said, we're coming up on our 20th year since I launched Big Trends back in '99, so 2019 will be our 20th anniversary year. Very excited about that in the year ahead. And then just hit the submit order button, assuming you got all your credit information in there correct. You're on our secure page, HTTPS. You want to take advantage of all that, lock it down, and be ready to roll for the next 2 years. So I told Steve and his crew I wasn't going to go past an hour here. But yes, you get the access to the FANG options trader there, Bruce, and auto trading can be a part of that, and no additional charge from us. It's just the broker will automatically get you in and out of each new trade based on the parameters you give that broker. And there's only a select few who do this. You can call us at our toll-free number, 800-244-8736. If you can't remember that, just remember it's 1-800-BIG-TRENDS, as in bigtrends.com. 1-800-BIG-TRENDS will get you to us, or you can email us over to clientcare@bigtrends.com, and you can benefit from that. Chris has posted more information about them in the chat there. But you can call us when we're back in the office, normal business hours tomorrow morning as well, if you have further questions as you're looking to get this locked down. Like we said, be typically about $4,000 worth of value. You're getting it for $595. That's like 85% off. Kind of like, man, I could get a lot more for this, but I'm like, it's my way of saying, you know what? I have tremendous confidence in what we've been doing. There's no guarantee on any one trade, but we're playing a probabilistic edge. It's worked really well for us in 2018, 2017, since we launched it 28 months ago, and even back into 2016. Bottom line is you really can now take advantage of this and know that you don't have to look at a whole lot of things. The 5 big FANG names and looking at those trade alerts when we send them out to you, when to get in, when to get out, or putting it on the auto trade to get that auto execution without lifting a finger. So thank you, everybody. I'm going to not keep Steve and his crew any longer. I want to say I really appreciate it. It's always a pleasure to be with you. Wish you all a Merry Christmas and a Happy Holidays, however you like to celebrate it. And a Happy New Year for 2019. With this special, of course, you're getting a happy 2 New Years of 2019 and 2020 at our best pricing ever for the FANG option trader. With the subscription that's generated those kind of results, obviously, it's paid itself back many times over to our subscribers. I'm confident you'll see the same type of success and opportunity, knowing that there's going to be losing trades along the way. So don't load your capital up into one trade and hope to hit it quick off of just any one sample. Spread yourself out across a lot of samples of trades, and I think the edge can work nicely for you in the next couple of years with that BOGO special. So a good night from me and Bryce Headley here at Big Trends. Happy holidays to all of you, and I'll hand it back over to Steve and his crew to say see you soon and see you in 2019. I hope, Steve, as well.